Hi guys, welcome to this Money Control live stream. Friday morning, you're watching Opening Bell with me, Nandita Khemka. Q's not looking all that great. You've seen the gift Nifty, hinting at a triple-digit cut, and of course, we back home have clocked in 5 straight series of negative returns for the Nifty. It's the first time in 29 years that we've seen 5 straight, 5-month losing streak, so to say. Even on the FNO front, the series has given negative returns for a 5 straight consecutive time. But of course, Q is not looking great, but stocks will be in focus, and more and more analysts keep saying that it is time to be stock specific. So we will be talking about stocks like Coal India, Granules India, all the other stocks as well that are the new entrants in the derivative segment. They also start trading in that segment from today. So yes, lots to look forward to. Your stock related queries will also be in focus. Keep them coming in on a live feed. We'll try and get them addressed as well. Global Q is not looking all that great, especially since Trump has said that the tariffs on Canada and Mexico will come into effect from the 4th of March. Has kept the global markets on tenterhooks. How the tariff wars really pan out could determine the market direction going forward. But of course, before we move any further and touch base with our technical analyst, let's quickly take a look at the top headlines at this hour. US stocks slide with Nasdaq leading the declines. President Trump confirms the imposition of tariffs on Mexico and Canada from the 4th of March. Meanwhile, higher than expected jobless claims also sparks concerns over the health of the economy, and fourth quarter GDP is in line with estimates at 2.3%. Asian markets open largely lower as Trump's latest tariff threats sour sentiment. The gift Nifty is also suggesting a triple-digit cut for our markets. So looks like we are poised to start the March series on the back foot. Brent crude rises 2% to $74 as supply concerns resurface. US cancels Chevron's license to operate in Venezuela, while the threat of a tariff war also leads prices higher. Gold prices meanwhile hit a 2-week low as the US dollar strengthens. GDP for the third quarter is expected to come in at 6.2% vis-a-vis 8.6% a year ago. Agriculture, construction and government expenditure are seen growing the fastest. And Finance Secretary Tuhin Kanta Pandey is appointed as the new SEBI chairman with a 3-year tenure. Current chief Madhabi Puri Butch's term ends on the 1st of March and Tuhin Kanta Pandey will take over from Monday, the 3rd of March. All right, then quickly take a look at the cues for trade. We saw the market slipping for 5th consecutive series for the first time in 29 years. The Nifty, in fact, has shed somewhere around 4% in the Feb series and more than 14% in the last 5 series. It was a 7th straight day of declines on the Nifty, by the way, although the Sensex did see flattish gains for a 2nd straight session. If you look at some of the other cues, then of course we did see heavy selling when it comes to the cables and wires segment. Even Ultratech, which is making a foray in that segment, saw a 5% cut. But stocks like Polycab, KEI Industries, they all saw losses to the tune of 18 to 20%. What should you really be doing with that? We'll ask our experts. But looking at the put call ratio, that jumped to 0.98 vis-a-vis 0.77 in the previous session. No stocks in the FNO ban today. We are starting the March series. We had one stock that was in the ban yesterday, Manappuram Finance, that is coming out of the ban. Net FIIs continue to sell, but the net sell figure yesterday was very less compared to the kind of selling that we have seen in each session. 550 crore rupee worth of stocks sold in the cash market yesterday by the foreign investors. DII net buy, stocks worth 1700 crore rupees in the cash market. So DII buying support continues for the market. But of course, let's touch base with our technical expert then, Raja Venkatraman, co-founder NeoTrader, joining us this morning. Raja, lovely to have you on the show, but the previous support levels are now turning into resistance levels. So would you be working with levels of 22,800 in the coming sessions, or would you say that's also elevated now, given the kind of sell-off that we have seen?
Yeah, good morning, Nandita. Thank you for inviting me to the show. And like always, over the last 2-3 sessions, I have been mentioning that the bearish bias was having a strong dominance over the proceedings, despite whatever kind of scenarios that were emerging. People were actually looking outwards, but the problem has been inwards. and that problem continued to escalate. And now with the scenario of the global markets also coming in, it has only compounded the problem. So now, like you rightly mentioned, 22,800, which was an important support zone, and which was holding for almost 7 to 8 trading sessions, have been breached quite decisively. And the gap region that has been formed clearly indicates that any rally which we will see will only be a relief rally, and the pressure will continue. Now, if you look at the kind of supports that we are looking at, so based on the option data, I can see that 22,500 is a critical zone as of yesterday. But now, March series is beginning on a weaker footing, and the breach of 22,500 to 400, which is an important support zone, could take down Nifty towards 22,200 and 21,800, because the pain right now could accelerate. Right now, the mid and small cap are reeling, and the problem is only going to compound when Bank Nifty also steps in. So right now, the mid and small cap are participating on a decline where people are exiting their portfolio, or some are not. Some are waiting for the rally to emerge. But the overall scenario looks like that the pain could extend, and with Trump waging a tariff war, I don't think that this pain is going to go away soon. So it is actually a trading market where those who are willing to trade on the short side are going to make some money over the next few weeks. But those who only like to go long should actually take a pause and wait for the market to settle down, because there is a lot of uncertainty, and in such uncertain times it is better to stay away. So now, for the support levels, I'm looking at 47,000 on Bank Nifty. I'm looking at 22,500, which is already broken and almost about to break as the open. 22,400 is the immediate support, then 22,200, then 21,800. So between Nifty and Bank Nifty, I would say Nifty is the weakest. Then we'll move to Nifty IT, and then we'll move to Bank Nifty.
21,800, that's lows that we could be staring at according to Raja. But Raja, just about 2 minutes to go for the markets to open. The big question then, what do you do with cables and wires stocks now? The likes of Polycab, KEI Industries, heavy selling. These stocks have already gotten battered, already corrected 25-30%. But after yesterday's, price action, they have corrected 40 to 45% from their highs. Do you look at this as a buying opportunity, or cut losses, average? What should be the strategy here?
Yeah. So when you look at what happened yesterday, right? Ultratech has only mentioned that they'll be entering. The same thing which happened with the Grasim entering into the paint division. Nothing much happened. It's just that even after mentioning, even Ultratech also came down. So the entire market scenario is negative, and that's one of the reasons why the stock started coming down, and the news flow triggered more decline in that stock. Now, considering the entire segment, I was hearing a news feed by Cable and Wires director, and he mentioned that this entire space is quite different, and the entire space is quite diversified. So, which space they are going to, nothing is clear as of now. So, taking a premeditated judgment and then exiting one's portfolio would not be a good time. Now, amongst the ones which have got affected, I find that KEI has been performing well. Even in the last quarter, it performed well. So I don't think that you should be looking to exit your cable and wires portfolio if in a hurry. And if you take a look at Polycab, right, which has been on a decline for the last few weeks, it has reached a important support zone also right now. So yes, the markets are pressured, and the stock with the news flow are pressured, but then with time this news flow will be absorbed, and we will see how exactly Ultratech is going to come out, and then the whole story will come around. So it's not a time to exit.
Right.
Yeah.
Sure. Raja, markets have opened, and it's a deep gash at the current juncture. We have broken below that 22,400 level as well. 22,350, that's where we are at. It's a 200-point cut on the Nifty. The Sensex is down 630 points. The broader end of the markets, relentless selling, and it continues. It's another 1.5% cut after yesterday's 1.5% cut. So not a pretty picture. Even the Nifty Bank Index, which has managed to outperform even yesterday, is down somewhere around 1% or thereabouts. So it's like a broad-based sell-off, and the advance decline ratio at the current juncture is at 1:6. So, that's the kind of breadth we are witnessing, and the breadth has been weak for quite some time, but 1:6, it's not looking pretty. Advances 285, declines 1700. Talk about, some of the sectors then. Banks, of course, I already mentioned, 1% cut coming in there, but aside of that, let's see what the other sectors are doing. Yes, aside of pharma, all the other pockets are in the red. Autos, were weak yesterday as well. Today as well, another 1% cut. Remember, the auto sales figures will start trickling in from tomorrow. Ahead of that, we are seeing some bit of weakness. FMCG down 0.5%. IT pack, I think it's down for a 7th straight session today. Another 0.5%, 1% cut rather coming in on the IT pack. Metals down yesterday. Metals managed to hold out, but 0.8% kind of a cut on the metal pack. Of course, given the tariff tantrums that are, the markets are digesting. Not surprising that metals are witnessing a cut today. Pharma, mild gains, nothing really to take home, from the pharma gains, because these are very mild early days. The VIX, India VIX has jumped over 5%, almost at 14 levels at the current juncture. Yes, it's an all-round weak start, no respite, 22,350, clearly, that has been broken, and 22,000, most experts also feel that 22,000 could also be violated in the coming days. So, March series has clearly not started on a sanguine note. Let's see how things really pan out, but let me quickly take you through some of the laggards then. IndusInd Bank, top laggard, M&M, Tata Steel, NTPC, Tech Mahindra, tech names like Tech Mahindra, Wipro, under pressure, HCL Tech as well, Infosys, Tata Motors, all these heavyweights are in the red as we speak. On the flip side, there are just 3 gainers. Coal India, of course, there is news flow around this counter, so reacting to that. Shriram Finance, yesterday as well, it was the top Nifty gainer. Today, extending those gains, and Grasim is the other one that's clocking in, very mild gain. So, just about 3 gainers on the index. Raja, really, I mean, I don't know what to say. It's not a pretty picture. 22,300, we are, at the threshold of breaking that level as well. What would you work with, at least for today, looking at this kind of an open?
Yeah, as we speak, the levels which I have mentioned have already been surpassed, which is 22,400. So the next stop is at 22,200, and the kind of the hope that everyone has been holding on to. So if you see, first we were ranging for 7 trading sessions at the same level, which was around 22,800. Then we were ranging it around 22,500 for 3 trading sessions. And if you see, 7 became 3. Now 3 has also been given up. So I don't think that any more consolidation will happen. And the panic, the extreme level panic is going to set in now. So yes, it's a market like I mentioned for trading. So trade on the downside if you can. Otherwise, it's a wait and watch for those who want to invest right now. But those who are holding their positions, if you are making some money, book it and then go lower. There will come a time, maybe towards the end of this month, where things will start to stabilize. Which is end of the month, I mean March, and that's when you got to consider, investing back into the portfolio. So if you're making money on any of your holdings, then it's advisable to exit at least some, so that you have some mental peace. Because right now the game is about
Book
mental
partial
peace.
profits.
Yeah.
Absolutely, absolutely. But in this current scenario, since you said it's a trader's market, one has to look at some trades. What would you recommend?
So I would recommend a short in LICI. LICI, I would recommend a short at current levels, and for a target towards 730 and 720. And also, I would like to mention a short in ICICI Pru at current levels, and for a target towards 745.
Those are the stocks then, but let's break it down to individual stocks then that are in focus this morning. Granules India was one. The US FDA has issued a warning letter to its Gagillapur facility. US FDA inspected this facility in August 2024 and US FDA has not indicated any further escalation. But Granules India has said that pending product submissions from the site may be temporarily impacted, and they will be, of course, responding to US FDA within the stipulated time. Today, I think it was the pharma pack that was kind of trying to hold on to slim gains, but I think they have already given up those gains. But Granules India right now, of course, reacting to this news flow, it's down somewhere around 5% or so, 484. Almost halved from 52-week highs, 40% cut or so. But how are you reading the charts now for Granules India? The stock has shed almost 30% in the last 6 months.
Yeah, considering the kind of movements which we are seeing in granules, it is clear that the pharma space has been going through some bit of negativity here. And yes, this stock has managed to hold on to higher levels. But then the thing is that right now with the markets witnessing some decline, so it could be a good time to book some profits here and look for lower levels around 350 to 370 to buy into.
350 to 370, that level where you can look at buying a Granules India. But Coal India, in a weak market, this stock is holding out, just about 2.5% higher, but it's among those three or handful of gainers on the index today, managing to hold out. Now, there is news flow that the company will levy 300 rupees per ton charge across northern coalfield mines, and this charge will be levied from the 1st of May. Now, this a higher charge will result in additional revenue to the tune of 3,800 crore rupees or thereabouts. Brokerages are also pretty positive on Coal India following this this move. They said that other headwinds that the company is facing may get set off due to this additional revenue. Your thoughts on how the stock is poised, because I think the stock has been underperforming in the metal pack, if I am not mistaken. So within the metal pack, would you look at a Coal India or would you stick to steel plays at the current juncture?
Yeah. So Coal India has been, talked in the same breath as the steel counters, but then this has more of a play of government regulations and the kind of orders which it gets. And now, when the kind of momentum which it has seen over the last few months, the we are only witnessing some profit booking. It's a very good stock amongst the investor fraternity who like to invest for a long term. So this dip will be actually be used for buying into, and this positive news flow will only generate some tailwind for the stock. So this is a good time to invest into Coal India.
Okay, good time to look at a Coal India. Then let's talk about a PB Fintech as well. There's been some bit of a management change. In fact, Naveen Kukreja has stepped down as the head of Paisa Bazaar. Of course, he will take up the role of group president. Santosh Agarwal will be the CEO of Paisa Bazaar from the 1st of March. But looking at the price action for the likes of PB Fintech, 30% shaved off on a YTD basis. 1470 is where it's at. Would you say that the risk reward is looking a little better than than how it was when the stock was around that 52-week high?
Yeah, see, the stock has gone through its fair share of ups and downs. After its listing, it did not fare too well. And after a long time, it started picking up its feet. And over the last 2 years, the stock has shown good trajectory. So the sharp rise which it has seen since the last 2 years, maybe we are witnessing some profit booking now, considering the overall market scenario. But overall, the stock's trajectory looks to be on an encouraging sign. And one should look at dip towards 1,300 as a good buying opportunity.
Okay, 1,300 presents a good buying opportunity when it comes to PB Fintech. Let's shift focus to our queries then. I can see the first query from Naveen on Polycab. We've already discussed that. Also, there's another query on whether one should swap from V-Guard to Siemens or ABB for 1 to 2 year time frame. This one's coming in from Satya CK. Would you advise such a move, such a switch?
Yeah, I would say that all the three stocks are not worth investing, because especially after the budget, Siemens and ABB have not really stood up to the challenge, and V-Guard also is witnessing some steady profit booking. So it would be best to, of course, exit V-Guard, but then switching to Siemens or ABB would not be a right idea at the moment. So best to wait it out and then check out this quarter maybe at the end of March.
Okay, hope that answers your query, Satya. But I want to take up a query on Shriram Finance. This one's coming in from Naveen. Of course, on the back of RBI reprieve, we saw a good up move in some of these NBFC shares yesterday, today as well. Shriram Finance at least is extending those gains in a weak market. 616 is where it's at. How are you reading the charts? Do you think this fresh up move that we've seen, do you think that has the legs to go up to 700 levels or not going forward?
Yeah, the NBFCs somehow they have managed to take the budget on a positive note, and since then we have been witnessing some steady up move in the finance counters. And Shriram Finance definitely is one of the displays of positive momentum. And with the kind of change in management and its operations, the kind of momentum which we are seeing right now in Shriram Finance is an encouraging sign. And yes, this could be some relief buy opportunities in this weak market.
Okay, what about Credit Access Grameen? Yesterday it clocked in a 12% rally. Today we are seeing this stock losing somewhere around 7%. Should booking profit be a good strategy here on Credit Access?
No, again, Credit Access Grameen is also amongst the financing counters, and financing counters are showing
Right.
some good traction here. So the pullback which we witnessed over the last few months has reached a good positioning now, and one could see a recovery in this counter. So if one is having a position, they should continue to hold on.
Okay, continue to hold on if you have any position in Credit Access, and Shriram Finance is looking good. But let's shift focus to Bandhan Bank since we're talking about financials. Sukruta Bhide wants to know your thoughts on Bandhan Bank, which she bought at 335. What should she do with the Bandhan Bank now?
Yeah, considering the price at which one has invested, the stock has come down by almost 50%. So at this juncture, it is now testing its low at around the 2020 low, which was around 152, and that low has also been broken. So this calls for a more rapid decline that can emerge. So it's best to exit one's position because it doesn't look to be heading for a recovery here. It's actually headed for more erosion in the price.
Okay, headed for more price erosion. That's about Bandhan Bank. I can see some queries on the capital market stocks as well. Kal Paruksha wants to know your thoughts on BSC, and there's a query on CDSL as well from Gudela Hemant. Of course, BSC yesterday was also under pressure. The stock, I mean, even if it did see some intermittent bouts of gains, on a YTD basis, the stock has given negative returns. I think it's down somewhere around 6% or so. I'm sorry, this is the wrong chart. But any thoughts on how BSC is poised at the current juncture, because it has seen some bit of weakness yesterday. If I remember, it was down somewhere around 6% or so. What should one do with the BSC and CDSL? How are you viewing that?
So BSE after the recent decline, it again witnessed a rally towards its all-time high. So BSE is finding good additions at lower levels, and after its inclusion into the FNO space, it definitely has attracted more volume. And the same goes the story with CDSL. But compared to BSE, the exchange stocks have been doing well, and so amongst them, BSE has definitely outperformed all the other exchange stocks. Then MCX came a little later, and then MCX also performed well. But now with the market erosion, I feel that if you want to go with a buy between BSE and CDSL, BSE is a better bet.
Okay, that's the view. Two queries we answered in one go, but let's move on to Trent then. Kartikeya Singh wants to know whether he should wait or wait for a rebound or book profits on a Trent. Trent, since the start of the year has not had a very good run. What would you suggest? Would you suggest booking some profits, partial if not fully?
Yeah, the FMCG space, the tailwind which one expected from the budget, it could not augur well for the prices, and the kind of rejection in a way we can see amongst the FMCG counters is clearly evident, and the declines actually started post the budget immediately in the FMCG stocks itself. So which clearly indicates that the driver, which the consumption theory, which was floated on the budget day, which was the only day when we saw the FMCG stocks rise, was a blip, and now the stocks continue to decline. So it is a clear sign that the FMCG stocks should be exited.
All right, that's the view on trend. Then I hope that answers your query. The next query is coming in from Manish Kumar. Wants to know your thoughts on an LNT. LNT has been on the back foot. If you look at all the long-term charts, you will see it has given negative returns. Of course, there were issues of government spending slowing down, it being an election year, expected to pick up and everything. Even when it comes to the capex, it was although what the market was expecting, but still, some of these cap good stocks have not been able to fire up, so to say. So particularly for an LNT at 3,170, what should one do?
So right now, when you look at LNT, yes, the hope that the government spending would once again emerge, and we will again see some spending of the held up funds has not really trickled off, and like you rightly mentioned, the domino effect is now emerging in LNT, and after consolidating for almost 8 months, holding the higher levels close to around 3,800, the stock is now giving up. So this would be one of the clear signs that a large cap is being sold into. So it could actually accentuate more decline. So if you're holding LNT, then it will be time to book some profits here and then look for lower levels to buy into.
Okay, that's the view on LNT. Manish, hope that answers your query. Couple of more queries then. I want to take up a query on Aditya Birla Fashion. Ayush Khanna wants to know, in fact, he has a short position in Aditya Birla Fashion. He wants to know what should his target be for the March series. Any thoughts there, Raja?
Yeah, if one is holding shorts in Aditya Birla Fashion, it's a good trade. Immediate supports are emerging around 202 to 205. So one can hold on to those levels. Yes, that seems a little far-fetched for now, but then the way the market is behaving, nothing seems far-fetched.
That's true. Well, that was about Aditya Birla Fashion, but quickly take a query on Hudco. Getting a query from Rupak Mehta on this particular stock, it has shaved off 27% in just a matter of 1 month. On a YTD basis, I can see a 30% cut. If anybody is stuck with a Hudco, how should one go about it? Averaging, would that be a good strategy?
Yeah, again, the housing initiatives which was initiated during the budget did not seem to have affordable housing situations could not make the stock go up. And now what has happened is in the pursuit in this particular month, we can see that important support levels have been given away. And yes, the stock had its fair share of run. The stock was a multi-bagger, but now we are witnessing some steady profit booking as key levels on the broader indices are giving away. We can see definitely some exit from portfolio exits that are emerging. So it would be a good time to book some profits.
Okay, it will be a good time to book some profits when it comes to a Hudco. But with that, we've come to the end of the query segment, and I would like to thank Raja for taking out time and joining in this Friday morning. Raja, it's not looking like a pretty picture, turning out to be a freaky Friday, so to say. We have fallen below that 22,300 mark as well, and now we'll be watching out for the support that you mentioned, 22,200 on the downside. Pain, of course, continues for the broad end of the market. Thank you, Raja. Not a good note to end the week, but let's see, let's hope there could be some bit of short covering or something next week, but I'll see you next week.
Okay, thank you, bye.
Thank you. Well, as I mentioned, not looking like a pretty picture when it comes to the market. Of course, the Sensex is down almost 900 points. We have slipped below that 22,300 mark as well. When it comes to the Nifty, the broad end of the markets, portfolios are bleeding, and how 2.5% cut on the Nifty mid cap index, and the advanced decline ratio is almost 1:11. Just about 200 stocks gaining to 2,170 stocks declining. That's the kind of pain that we are witnessing in the market. But how should you really navigate this leg of the sell-off? What is the floor? Are we near a bottom? Let's figure out and pose this question to our next guest. Joining me is Siddarth Bhamre of Asit Mehta. Siddarth, lovely to be chatting with you. Not a great Friday morning. In fact, all of us will be waiting for the markets to shut and look forward to the weekend. Given the kind of week that we are having now. But how would you navigate this leg of the sell-off? Because we've seen 5 straight series of losses. March series hasn't started on a sanguine note. What should the strategy be now?
Good morning, Nandita. Well, markets are just one part of life. It's a great morning, so let's be cheerful. And if you look at from a long-term investor point of view, then such kind of markets are delight because it offers quality names at desirable valuations. So it is how you're seeing market and what's your time horizon makes you feel a bit jiffy or excited in this market. I'm quite excited in this market. Well,
so
yes,
what would you be buying then,
March,
Siddarth? If you are
well, yeah,
excited, where would you be looking to hunt for bargains?
Well, my compliance doesn't allow me to buy personally, but definitely we are going to dwell more into the sectors and stocks which we are liking. But purely from market perspective, Nandita, if you look at the seasonality, then yes, month of March looks has a better probability of giving a positive return. In fact, on your own website, there's a good seasonality chart on how Nifty moves. So 68, 69% of time March month has been positive. But then these numbers and these seasonality charts look great when you're looking at them and forming positions or investing in a normal market situation. And we all can agree to this that this is not a normal market situation because you were talking about 5 months of losing streak, and this has happened first time in 29 years. So should we give weightage to seasonality is one question we need to ask. But then a long-term investor doesn't look much into seasonality charts and invest. I feel there is still some pain left in this market, and especially in mid and small cap segment. And my prime reason for that is that a lot of people had invested in mid and small cap funds last year. Most of the major inflow which came into mutual funds last year was in mid and small cap schemes. And we haven't seen any meaningful redemption yet over there. It's been like, if you look at now, more than 18 months SIP return in a large cap fund would have been giving now a negative return. I understand you don't do SIPs for 2 years, but then retail investors, bulk of money which has gone into mutual fund, they chase performance and seldom look for outperformance. So I am expecting, further weakness in mid and small cap segment, and would be very, very stock specific selective if I want to be in mid caps. Large caps, there are some pockets where we are seeing value emerging. There are some pockets where we are seeing that this selling is not impacting, and that is where we would like to position ourselves. So I'll be very nimble-footed in this market, not get excited because certain levels have been breached and now stocks are looking attractive. You have to see valuations from a relative perspective. What I'm trying to tell you here, Nandita, is that uh, because your five-year average valuation is looking cheap, doesn't mean that stock is actually cheap. We have to go back 10 years, 15 years in such kind of markets and see that where valuations will find their feet and then invest accordingly.
All right, now don't get too excited by looking at the stock prices. Be nimble-footed and of course do your research before investing in stocks. But let's talk about particular sectors, specific sectors, and one sector that has been hogging the limelight for all the wrong reasons is the cables and wires segment, right? because, of course, Ultratech is looking to disrupt this space as well after the Birla Group has already disrupted the paint space. We also saw how things really panned out there. Asian Paints and other paint makers have seen a fair bit of correction ever since this competition came in. But here, Ultratech has just about mentioned now that they will be coming into this segment, and the plant will only be commissioned in December 2026. But we saw such a knee-jerk reaction on stocks like Polycab, Kia Industries. Do you think it was an overreaction? Do you think there is a lot of pessimism because of what transpired in the paint sector? Is there, a parallel you can actually draw, and do you think it's an overreaction? Your thoughts on this entire issue?
Well, it's an interesting development which is happening in this space. There are few differences which I want to highlight between paint space and cables and wires. That paint space was going through consolidation, a weaker period, and cable and wire sector that's going at a healthy double-digit growth rate. So the two sectors are in different situations. So if somebody is in really critical situation and then you beat them down more, chances of failure are quite high. But if somebody is doing great and you bring some hurdle, it is quite possible that there might be a pause, or there can be some slowdown in pace, but the chances of failure are far less. So I believe there is a underlying difference between paint sector and cables and wires because of the growth rate and the margins of the business, plus the quantum of investment the new player intend to do. So I will not say that it's an overreaction, because see, you have to see it from total market context. Now, very few spaces are there where correction has been less, there has been earning visibility, and everybody is trying to hide there. And this space was one of that space, in mid and small cap segment. And all of a sudden, even there, you are trying to shake things. So there would be a knee-jerk reaction. There will be funds who are hiding in this space, getting jittery that this market is bad and now you should move out of this space also. So it is not an overreaction, looking at in totality. How to approach this space? I think looking at market situation, looking at the kind of investment Ultratech is sounding, I believe there can be some more downside from current levels in this space. Also, one has to understand that this space was demanding valuation on trailing basis above 45-50 p, which I feel was slightly on the higher levels, but a lot of market participants would justify because the growth rate has been higher, so they will command higher. But now market has come down, market valuation has come down, the competition is creeping in. So there will be some amount of derating in valuations, and that is getting reflected in price. So I believe there is still some more downside, but this is not a space where you should be shying away from medium to long term. If there is a correction of more 10-15%, which it looks quite likely, I think some of the names in this space like Polycab, Kia Industries, these are some names which one should think of investing at lower levels.
Right. So the correction that we've seen, and if there is more 10 to 15% correction from current levels, these would look as attractive opportunities to invest in. But let's talk about the auto space as well. When you talk about competition, this is one sector that has been facing the heat, or the heat of anticipated competition from Tesla, right? So we've seen stocks like M&M, Maruti, Tata Motors see a fair bit of correction. How would you approach this space now? Because we've seen a fair bit of correction in these names, and we also have auto sales figures coming out over the weekend. Passenger vehicle has been in a spot of bother, right? That segment in particular. So looking at the correction, do you think valuations justify that now, or would you say that since there's so much anticipation of competition here, two-wheelers pose a better opportunity given the fact that we are witnessing rural demand as well?
Right. So firstly on Tata Motors, I think Tata Motors has been underperformer for various reasons, and even from auto numbers perspective, my analyst said that be it PV or commercial vehicles, Tata Motors is going to be laggard, and I believe that is getting reflected in stock prices. Yes, you are right that one has to be more bullish on two-wheeler space, and especially some of the names like Bajaj Auto, TVS. In fact, this month we are expecting even Aisha to do well in two-wheeler space. Hero MotoCorp would have probably sluggish numbers, but from valuation point of view, Hero Moto is looking attractive. But it needs to, show some support from monthly numbers perspective, which are missing right now. As you mentioned, that the rural economy is doing better. The consumption power may not be very significant in urban areas, but then rural areas we are seeing uptick, and that is getting reflected. Stocks like Bajaj Auto, which also have good share. In fact, 50% of its revenue comes from export, and the markets which it is catering to, especially LATAM, is looking great. So in two-wheeler space, we'll be more interested than PV. Maruti, yes, it's looking attractive from valuation perspective, but I think monthly sales numbers are not giving us great confidence right now to talk very bullish about it. But some more correction, and we'll be interested in PV segment, especially Maruti. Honda is not doing that great as far as monthly numbers are concerned.
All right, that's about the auto space. Any other sector that you would recommend now? In fact, even if you can highlight some stock ideas from your coverage universe that's looking attractive now after this correction.
Well, one space which my alternate research team is quite bullish on recently is FMCG space. They are expecting that the correction in FMCG is more or less done. They have come out with a wonderful report with three stock ideas in that. They're bullish on HUL, ITC, and Nestle, and they have their own reasons. But from fundamental perspective, HUL now is available on trading P 40 times, and I don't know when last time we have seen HUL trading around this 45, 50 times P multiple. I understand there are challenges, but then sometimes you have stories, sometimes you have valuation. That's my go-to dialogue when I talk about valuation. And also, Nandita, our market where money was chasing growth will now move in a territory or in a phase where money will start digging value. This people need to keep in mind rather than chasing growth stocks. The new funds or funds which are trying to take contra call will look for value, and that is where probably some of these FMCG names would come into play. So that's the theme which we are advocating at this point of time. Some of the names which you are liking, recently we came out with one of the, in fact, it's an auto iron company. We came out coverage in a mid-cap segment, Gabriel India. And if you look at mid-cap stocks and look at the stock price of Gabriel India, it didn't correct much. If I have to quickly wrap up about this, then it is into suspension, but it is pouring into high margin business, which is sunroof. It has various OEMs as their client, and it's doing pretty well. And valuation wise, also quite attractive. They have a target price of 605, which gives decent 25% plus upside from current levels. So Gabriel India is one of the stock which I would recommend from our universe.
All right, Gabriel India, that's the stock recommendation from Asit Mehta. But with that, Sid, we're running out of time. Would like to thank you as always for taking our time and joining in. Always a pleasure chatting with you, and I look forward to more interaction in the future as well. Have a great weekend.
Thank you so much. Thank you. Wish you the same. Thank you.
Thank you. Well, that was Siddarth Bhamre with his recommendations and views on the market. But look at the market now. Although it is a 280-point cut on the index, 22,264 is where we are at. But I want to point out that Reliance Industries has shot up to the high point of the day, up somewhere around 0.5% or thereabouts as we speak, 1212. That's where Reliance Industries is at. It has surged to the day's high, and in a weak market, this stock is providing some bit of support to the index. But of course, not a pretty picture, 2% cut on the Nifty mid cap index as well. But in terms of the advanced decline ratio, it's getting worse by the minute. 1:11, that's the NSE advanced decline ratio at the current juncture. But also some some data expected on the macro front. India's GDP growth is expected to be unveiled later today. It is expected to come in at 6.2% for the third quarter, down from 8.6% year on year, and up from 5.4% on a quarter on quarter basis. This is of course according to a CNBC TV18 poll. In fact, if you talk about the gross value added, that's projected at 6.3%, slightly lower than last year's 6.8%. For the full year FY25, GDP growth is estimated at 6.3%, just below MOSPI's estimate of 6.4% and RBI's earlier projection of 6.6%. The key drivers would be agriculture, construction and government expenditure as well, and that is expected to see the fastest growth. Meanwhile, MOSPI will be releasing crucial data including the second advance estimate for the current year, the first revised estimate for FY24 and the second revised estimate for FY23. And of course, keep an eye out on any sharp revisions to past numbers because that could impact the current year's estimates as well. So yes, third quarter GDP data will be keenly watched out for. But with that, we are completely timed out on this edition of Opening Bell. Thank you for tuning in and of course have a great day. Not turning out to be a great session because it's almost a 2% cut on the mid cap index and 1% cut on the headline indices. March series has not started on a great note, but let's see how things really pan out. But I'll see you again at 3:30 p.m. Don't forget to tune in to Closing Bell. Till then, have a good one.